morning guys, we've got quite a bit to cover today. We'll do the economic calendar. I think probably the key thing is the PMI data from the States. Obviously this is still going to be very important, but I think all eyes on the US data today, and that's 3 o'clock. Yeah, so a little while to go. It's good to be prepared. So I think this could be the move today, but do keep an eye on all this stuff as well. There's lots and lots of stuff and high severity. So that being said, there's also a speech from the RBA governor as well, which might move the Aussie, so be careful. So that's that. I wanted to also talk about the bubbles, and I want to talk about the EURUSD order book and why it rallied yesterday. And there's quite a good analogy to use that we can implement. So currently the dollar is weakest and the gold is strongest. So dynamically EURUSD is a buy, because you see the distance between the two, and also dollar CAD is a sell. CAD's the only one in the strong buy section. Nothing is in the strong sell section, so you've got to be a little bit careful. Actually yen it's just teetering over. If the dollar joins the yen over here, we're going to be pretty risk on. The quasi-DB guys know about the S&P, and you know what to do with that. You know, we've got the trigger, so that's cool. So if the dollar comes up, we're going to be quite risk on, which is going to reinforce everything that I showed you in the technical channel. So let's talk about the order book for EURUSD. Well, actually, while we're on gold, we'll just do the stop loss clusters. One above is 1808, one below is 1777. We are a sell, but it could just override the static view, because dynamically they sold it. Let's go to indicators and we'll do the ratios. Don't forget, whenever you use the FX SSI indicators, you have to click allow DLL imports and see they sold it. That black line, we always want to look at the average line. There we go. So that dynamically it tells us it's a buy because they sold it. So where did they sell it? Here, and we came up. Yeah, it's a little bit, not much, $8.5. So there's that move. If they continue, we'll continue up. Okay. So the EURUSD. Now I suppose what you could think of, we can use an analogy. Right, we were down here. Okay. So if you remember, 111.30 was a good support. I told you guys about that. I suspected it was some kind of ECB intervention. It held really strong. I was watching the ticker chart for about an hour and a half, and it wouldn't budge below the 111.30. Now I've got a theory for that. It's the ECB intervention. It was also the average monthly range low as well, so it had a technical justification for holding. Now sentimentally, you can zoom out a bit so I can show you. Now there wasn't that much liquidity down here to probe. Now if you were a hungry wolf and you were looking for an easy snack, there wasn't that much, there weren't many sheep to digest down here. I mean, there were quite a few, but there's more up here. So when we run stops, it tells us there's not much liquidity left. You know, it's almost like if you were a wolf and then you saw like a pack of sheep or like a couple of sheep, would you go for the majority or would you go for the minority? Don't forget, it's quite a lot of effort and a lot of work to hunt the sheep, or you can make it a nice easy prey here. So why not push price to get the prey, and they can have a big feast, where this would be hard work and it'd be an effort to get liquidity. Over here we've got liquidity, it's easy. So we held the technical support. Whether or not the ECB intervened, probably not, but it did hold incredibly well, and up we came. Also, don't forget, no one really wants a USD wrecking ball, so there was probably a lot of buying pressure to avoid the wrecking ball of the dollar. So that's the theory there. That's why we didn't really come down, because there wasn't much liquidity, and there's easy liquidity above, as we can see. So I'm going to be using the order book a little bit more on these videos so you can understand how it works. And so we target the SLCs, which are these volume nodes that are sticking out. So by using the FX as indicators, you would know by looking at the order book not to place your stop at the volume node, because that's where we're going to probe. You might be best to put your volume node, your stop loss there at 112.59. You know, it's not that great practice to move your stops higher and always try and have a static start, but you wouldn't want your stop there because that looks like it's a target. So that could be better. Yeah, it's only 7 pips away, so that's that. Got an ascending channel, and these are your current positions. So these are going to act as a potential support at 112.36. So knowing that these guys are going to hold on to their short bias, it's going to push price up, right? And so that's the order book. Pound, I guess. So we've got an ascending channel, which is quite nice. It's quite clean. Let me zoom out a bit. We are taking the SLC above, which would make sense dynamically. Yeah, we did sell a little bit. Yeah, we did sell a tiny little bit, and so we come up. Ascending channel, but a big descending H4 channel, which looks like we're going to break. Don't forget we're going to be potentially risk on according to that chart that I shared in the technical area as well on the S&P. Pound USD is buy. You can see the dollar is weak, and that will coincide with the bubble, right? So that proves that the sentiment's working. Okay, I guess maybe do dollar yen, and I did a volume node analysis as well, so keep an eye on that. Descending channel, and your volume node of interest is here. It's miles below at 113.40. Now it's an historical stop loss, so it's old, and I think it's going to be taken. I think it started around the end of the month, so about a week old. Yeah, so possibly going to get down to there. We might entertain a naughty manoeuvre for 28 pips higher to get that before dumping. But yeah, technically it's looking a bit heavy. Also the volume node here. So basically we're creating a lower low on the volume node. We made a higher high, just high, lower low. And what's interesting on this, on the quant tower, is see the 19, 6, -1, -4. So it's telling us that that number is descending, so it looks like we might come down in price, potentially. So that's that, I guess. Just let me know if you want me to do any pairs. I won't mind. So yeah, that channel's wrong. It needs to recalculate that. But the SLC above for AU is 71.05, and that's huge. And you see that liquidity up above. Now, if you were a wolf and you wanted to hunt some sheep, where would you go? You'd come up and get that liquidity, right? It's just easy, as opposed to pushing down price, and that's hard work. This is easy, right? So, and the fact that we're going to come up is reinforcing the risk on theme that we have. So what's this saying? Alright, so it's making a bit of a crazy channel there, but saying it's an ascending channel anyway. But hopefully the analogy helps with the wolves and the sheep, and it makes sense after all as well. And so that's that. So I'll wrap up now. Have a good day and trade safely. We've got the PMI data in America, and then we've got the BOE on Thursday as well. So trade safely. I'll speak to you soon.